Yeah, John, I mean, gold is a little bit of a chameleon, right? It can benefit from high liquidity environments, macro stress, all these different indicators, high inflation expectations, but it didn't really do that well in the inflationary boom. Here we have it hitting a new record and really accelerating to the upside. And I have it here over 2 years compared to its 50-day moving average, just to see it in relation to its own trend. So you see when it's kind of raced out ahead of itself a little bit in these prior periods when it spiked far above that 50-day. That was when it got about 10% above, and then you have a little bit of a pullback. You notice it didn't spend much time below that 50-day average at all, but right now we're maybe 7% above, so not necessarily as stretched as we've been. There's a lot of acclaim that's followed this chart, basically feeling as if you'd want to follow the trend and not fight it. Take a look, though, at gold relative to copper. This is an indicator. I mean, maybe it's a little bit archaic, but people always watched it as a gauge of whether their store of value is in more demand in gold form or if it's productive assets and a play on global growth, such as with copper. And you see it's kind of gone back to this old peak from right in the teeth of the original pandemic lockdown. So obviously gold very stretched relative to copper. It recently had this other leg higher as copper prices fell in New York. This is based on New York copper, in part because of some nuances of how tariffs are going to be applied. Nonetheless, you see that this relationship is maybe getting a little bit ahead of itself. And finally, gold compared to the Dow Jones Industrial Average. This, again, is one from the archives that used to be monitored. Is it about gold as a monetary asset and a store of value, or is it about productive assets such as big companies? So again, we're off the highs here, but you're still kind of not too far from the upper end of this long-term range. It doesn't necessarily say which way we're going here, but it does tell you that there's been a real pile into gold for people of various motivations, and it could just be about sort of policy flux globally and a lot of money in motion out of areas where the currencies have been under some pressure.
You're talking about gold and copper. I heard you say claim and gauge. I'm a pun guy, so I like to think that's on purpose. But I want to ask you about, a lot of times we think about gold, we think about a safety trade, and this doesn't seem a market that's been that interested in safety. So has that effect broken down?
It's very interesting, John. It almost does seem as if it's safety from certain things. So if you're worried about, let's say in theory, worried about irresponsibly loose monetary policy, or that it's going to stoke longer-term structural inflation expectations. Well, that is something that you might say gold would be protection from, but equities can do okay there. So it looks like there's equities that can participate in that, and that looks like risk on. So that's why I say it's a little bit tough to sort of really get a grip on exactly what the message is when gold is doing well. And then now you just have the trend followers saying, you know, we just like to take the ride along with this price.
Yeah, and whether it's gold or whether it's copper, the miners will tell you we're not pulling enough of either of them out of the ground to meet the future demand.
Yeah, that's right. The
so
supply side's not there yet.
Yeah. Mike Santoli.